would you do if you're the Federal Reserve? And Thursday, here's a report that I'm really interested in. And the reason being is last Friday, we had a jobs report that really tanked the markets. There was 93,000 jobs uncreated, they said. Well, I looked at all the data that we had from the last several employment readings, and there was some makeup, some pickups on things, but nothing that dismal. So this week on Thursday, we're going to get initial jobless claims and continued claims. So I'm going to pay more focus to this than a lot of things coming out this week, because this is going to tell us what the jobs market is. Now, here's the odd part of this. Initial jobless claims, they're saying the last reading was 213. It's going to go up to 216, a little increase. Well, that's a far cry from 93,000 negative. So just saying. Then on Friday, here's what we're really going to start getting in. That inflation number, the PCE, this is what the Federal Reserve watches. So they're saying the PCE inflation number is going to go from 0.4 to 0.4 month to month, and then 3 to 3.1 year over year. I'm saying that's probably not even going to be close to being the case. I'm saying the PCE is going to probably be 0.5 or 0.6. It's going to be higher than expected because of the January effect. I have a lot of friends in the manufacturing business and steel and things like that. And they're telling me, they're like, Dan, we didn't increase our prices last year. We're going to do it this year. And so I'm like, okay, when? They're like, we're going to float it in at the beginning of the year, and we're going to gradually float it in over the few months. Well, that's most likely what they're going to do. So these numbers most likely are going to be inflated. So basically, as you can see, we're focusing in on the things that are inflationary, like oil. Then we're really focusing in on the things that really affect me and you. Do we have a job? And where our prices are going from here. So that's the things that we focus in on, and that's also the things that the Federal Reserve focuses in on. So in 8 days, you realize in 8 days they're going to come out, they're going to tell us what they're going to do. What would you do? So what would you do if you're the Federal Reserve? I wouldn't be doing anything. Yesterday there was a 97.4% chance of no rate cuts. Let's see what it is today, 97.3. So a little bit of a better chance of a rate cut, but folks, they're not going to cut at the next meeting. They're not going to cut at the meeting after that, and there's not even a 50% chance they're going to cut in June. And in June, we're going to have a whole new cast of characters where we're even going to have a new Fed president that's probably going to be on the rate cut path.